What's up everyone, it's Karthik with MoneyVest. So markets hitting yet another new all-time high. The S&P 500 at 5,732 points. We got the Dow Jones trading over 42,000 and the NASDAQ crossing over 18,000 points, up over 0.5% after the huge reversal in Nvidia stock after reports suggesting that Jensen Huang is indeed done selling the stock. And as you guys know that I've been trading Nvidia for the last 4 to 5 weeks here, and my portfolio, my options portfolio, hitting a new all-time high at almost 93,000. And this right here are the positions. Nvidia up nice $7,200 open P&L, and this right here is the Tesla position that I took on yesterday. So this was a buy right, so buying shares and selling calls at the same time, and that position on a net basis right now is up close to $400. It's going to be up a little bit more than that because of all the premiums that I'm going to continue to collect. If Tesla closes below 250, great. If it closes above that level, also fine. I'll see if I can roll these contracts out for next week as well. So all these updates are going to be shared on our Patreon, on our Discord. There is a 16% annual discount that's available for 6 more days, so until the end of this month. So you can take advantage of that with the link down below. Would love to have you on board. We've got lots to discuss in this video. So all I'm asking in return is that you share this with your friends and family, copy this link and put it on other groups. Share with investors, traders that can benefit from this video as well, because we got lots to unpack in this market update. So on the day, we've got materials leading the way up a little bit over 1.3%. We had discretionary up almost 1% on the day, with Tesla also rallying higher. We had industrial and technology overall pushing up over 60 to 70 basis points. The NASDAQ 100 up almost 0.5%. Communication services up about 0.5%. S&P 500 up almost 30 basis points. And real estate essentially flat on the day. So those were the gainers, and a lot of that liquidity coming out of the biggest sector so far on the year, which was utilities, down almost 70 basis points. Financials also dropping a little bit over 80 basis points. And then we had healthcare, staples, energy, all dropping anywhere from 20 to 30 basis points on the day. So this was a little bit of a risk-on day here as technology was leading this market higher. Something that we have discussed on our previous videos is that utilities and staples are not going to be the sectors leading this market to new all-time highs or leading this market higher. It almost always has to come from technology, from the leadership and the dominance of the Magnificent Seven, and that's really what's going to move this market higher to new all-time highs, and that's really where we are, with the S&P 500 adding a little bit over $123 billion, up over 24 basis points. And if you take a look at Big Three here, up almost $100 billion. Of course, majority of that coming from Nvidia. Magnificent Seven, $114 billion. I guess it's all Nvidia today. And then we had top 10, $127 billion. If you take a look at the top gainers on the S&P 500, Nvidia and Tesla, those are the two stocks that I'm actually trading on my options portfolio, which is why it's trading at a new all-time high. Collectively up $128 billion. Nvidia up over $114 billion, up almost 4%. Tesla up 14.8, Apple also pushing up 13.8 billion. We had Broadcom, we had Home Depot, Nvidia, Netflix hitting a new all-time high, up over 2.3% to $7.4 billion higher. Caterpillar, and then we also had Google and Salesforce and Uber, all pushing up anywhere from $5 to $7 billion on the day. And this right here is where we are in terms of our market snapshot. So Netflix here at a new all-time high. That is very, very good to see. Amazon well within 3% of all-time highs. Apple well within 4% of all-time highs. Microsoft is still in a little bit of a pullback. Nvidia, of course, still in a bit of a correction, so still down over 14% from its all-time highs of well over $140. Google's also in a correction, so even though we are seeing that momentum back up for these companies, they're still well within a correction territory right now. We've got Advanced Micro Devices still in a bear market. Broadcom's well within a pullback. Oracle has pulled back also a little bit within 5% of its all-time highs, so in a dip. Right now, we got Salesforce down over 15% from its all-time highs. Qualcomm down 27%. Tesla has also made some decent recovery. It's now under 40% of its all-time highs, but still in a bear market. Adobe's in a bear market, down 25% from all-time highs. And Meta pretty much trading near all-time highs, less than 2% away from all-time highs as well. Now, coming over to some individual stocks and individual sectors and ETFs, you've got S&P 500 at all-time highs, so again, less than 0.05%. The Dow Jones, same story, well within a all-time high right now. Got the NASDAQ still 3% away from all-time highs here, and we got utilities also near all-time highs. If you come over to staples, over 2.4% from their all-time highs. And Russell 2000, that's where a lot of that underperformance continues, where we are seeing the Russell 2000 still well within 10% of their all-time highs, so still in a bit of a pullback at the moment. Now, when it comes to the relative rotation graph, as we already know that real estate, utilities, you take a look at staples and energy, those are sectors that have been in the leading quadrant for a really long time, and technology and communication services and even discretionary to some extent has been lagging or essentially weakening from that perspective. But on the day today, you'll start to see a little bit of that reversal that happened for technology, right? So we're starting to see that movement more towards the improvement quadrant. Communication services has been more or less flat over here, and discretionary also is moving a little bit more to the right, which is XLY over here. That includes your Teslas and your Amazons, all the discretionary stocks. So they're kind of moving a little bit more towards the leading parts. And if you take a look at how real estate did, so again, starting to move down, utilities is flatlining a little bit here, and staples and energy starting to rotate back down to slightly more on the weakening side. So this is where the trend starts to play a bigger role, right? So as we already know that these are the sectors that have been leading this market for the longest time. In other words, they are the ones that are actually performing better on a year-to-date basis. So XLU, XLRE, XLP, those are the sectors that are up 22-25% year-to-date. And technology has been lagging, even though it's participating in this rally. And this has been one of the broadest market participation that we've seen since 2002, which is also a very, very strong and a healthy bull market that we're witnessing. But this right here, again, goes to show that, okay, those trends are now starting to shift a little bit here, with real estate starting to come down, utilities flatlining a little bit, staples are starting to roll over, and this is the quadrant which is a little bit more on the weakening side. And then weakening moves over to lagging moves over to improving again, and then improving moves over to leading again. And that's where we can expect technology and discretionary and comm services to eventually rotate back into, right? We really want them to be the leading sectors in the market. That's where we're going to continue to see that upward trajectory for the market, because if these sectors, if big tech or Magnificent Seven sells off, doesn't matter if all the 10 sectors are pushing higher. Does not matter if technology, if Mag 7 is selling off aggressively, the markets are really going to be either sideways or they're going to start rolling back down because of that market weighting, right? So market weight is really heavy on technology as it is for other sectors. So that's something to keep in mind, and we are starting to see some rotation back to the upside. And as I mentioned earlier, this again is the highest and the broadest market performance compared to as far as 2002. So that is a huge indicator. Just goes to show that the percentage of S&P 500 stocks outperforming, also on pace for the best performance since 2002. So number of S&P 500 stocks are outperforming the index, which again has been very, very strong for the markets in terms of its breadth as well. But we really do want technology to kind of lead this market higher, because days like today, where Nvidia, Tesla, Apple, they're the ones that are actually leading up, and XLK is pushing higher, are the days the S&P 500 sees that momentum upwards. Otherwise, like I said, it's more consolidation and maybe even more downside pressure. Now, coming into market sensitivity, based on S&P 500 options, the next two non-farm payroll reports and the prints are the main catalyst until the election. So you can see how election volatility is so elevated. Implied daily move is, somewhere between 2.5% to as much as 3% for November 6th. That's the day after the election. But non-farm payrolls is the next big catalyst for the market. And as I mentioned before, the market sensitivity to these type of catalysts is only increasing. Why? Because there is still a lot of uncertainty regarding recession. There is still a lot of unknowns regarding what's going to happen with interest rates. So while the market continues to cheer on the 50 basis point cut, and as we've discussed, that's a pretty big measure in terms of monetary easing from the Federal Reserve. And China also announced a huge stimulus with 50 basis point cuts on their country as well, on their central banking as well, to help support the economy over in China. We'll discuss that later in the video, but there is still a lot of uncertainty and unknowns regarding where the economy is headed with regards to inflation, interest rates, and unemployment. So markets sensitivity to these type of data points is still going to be pretty elevated. And of course, it only increases going into election day, because that is perhaps the biggest decision for the United States, and that's going to really essentially create a path for the next 4 years for the markets and for the economy as well, right? So because that's going to be playing a huge role on the economic policy, monetary policy, every single thing, right? Fiscal policy. So election day volatility is expected to be very, very elevated at 2.5 to as much as 3% for implied volatility on a daily basis. Now, S&P 500 hits a new high as mining stocks rise on China stimulus boost as well. So People's Bank of China government Pan Gongsheng told reporters in Beijing that the reserve requirements for bank would be cut by 50 basis points or 0.5 percentage points in the near term, and then the central bank would follow up with further cuts that would free up more money for lending as well. And regulators also plan new policies to stabilize the stock market as well. So again, that's a huge measure which resulted in Alibaba, a lot of Chinese stocks pushing up anywhere from 5 to as much as 10, 12, 15%. So, creating a lot of this momentum into Chinese stocks here. Quantitative easing is back on the table for the Chinese economy. Nvidia shares pop as CEO may be done selling shares. So CEO Jensen Huang is done selling the chipmaker stock for the time being, cashing in more than $700 million under the arranged plan. So these plans are called the 10b5-1 plans, where the CEO or whoever is the insider, they essentially tell an institution, right, to essentially sell or buy or take an action on that particular stock in a given time period, and the institution essentially acts on their behalf. Obviously, these are all prearranged, meaning that these are decisions made by the insiders months, even years in advance, because that way you can know that, okay, they're not inside there's no insider trading, because by the time these decisions are made, they can't change them, right? So they can't change those decisions, and they're just going to follow this prearranged plan. And this was supposed to happen, or this sale was supposed to take place by the end of the first quarter of 2025. So they've already Jensen Huang's already hit this threshold months advance of the schedule, and so we can expect no more selling from Jensen Huang, at least up until the first quarter of 2025. So that again is creating that momentum back into Nvidia stock, as the biggest individual shareholder of Nvidia is probably done selling. He still does own 75.4 million Nvidia shares and another 786 million shares through different trusts and partnership as well, making him the largest individual shareholder for the company. So I'll see if I can continue to roll out my Nvidia calls. If Nvidia continues to move higher, that's good news, and I will continue to milk out those premiums, and I'll see how far I really want to go. I really don't want to go above more than a month here on expirations, but if needed, that's also a potential option out there. Now, consumer confidence came out. That was actually one of the reasons why the markets weren't doing as well, because we came in at 98.7. So it was lower than the consensus of 103. And then we also had the Richmond Fed Manufacturing Index, which was at negative 21, still showing significant contraction. Now, look, a lot of people are going to look at the markets and they're going to tell, they're going to tell each other that the markets are at all-time highs. That means the economy is great. We can't really look at those two, with the same lens, because they're two very different things. Just because the markets are at an all-time high does not mean the economy is doing well. Vice versa. Just because the markets are, trading down 20, 30% does not mean the economy is doing poorly. Just like the company's fundamentals are different from the stock price, it's the same exact concept. The economy is different than the market. They're not the same thing. And so if the economy continues to weaken, that's really what the market is looking forward to. Is getting those answers. What's going to happen with the economy over the next few months with the new reports, the economic data that we're going to get, as well as the election and interest rates as well. So if there is any chance of a potential recession, then as we already know, the markets tend to not perform as well as when there is not a recession. So this right here is the Federal Reserve rate cuts, how the markets have performed, and whether we saw a panic cut, a recession cut, or a normalization cut. So that's really the difference here. And what you'll notice is that when we have seen a recession cut, meaning that the cut has happened in the middle of, or in the beginning of, or during a recession, the market's performance, of course, is really, really poor. We're looking at 33% probability only for the markets to be higher, with an average and median loss of about 11 to as much as 14%. Versus when there's been a normalization cut or a panic cut, then 100% of the times markets are higher 6 to 12 months down the road, with an average median gain of 11 to 13% to as much as 17% to the upside. So really, recession is the key to unlocking all the answers to the market here. If you get a recession, market performance is going to be poor. It's going to be weak. If you don't, you can expect 12 months from now markets to be significantly higher on average, on median, by at least 11 to as much as 17%. So somewhere in the double digits, 100% of the times that's happened in part for previous cuts as well. Now this right here is the probability or percentage of times sectors have outperformed the S&P 500 since the Fed started cutting interest rates since 1974. And what you'll notice is that 6 to 12 month timeline, we really have had real estate and utilities kind of do really better, much better, 89 to as much as 67% probability that they're higher, outperforming the S&P 500. Technology is also up there at 78 to as much as 67%, as well as materials. And then we also have consumer discretionary pushing up 89% of the times, outperforming the S&P 500 6 months after the Federal Reserve rate cut. And this right here is also when the Federal Reserve cuts interest rates near all-time highs. The bulls seem to love it, and this is the next year's performance, which is also at just under 14%, and the probability at 100%. So again, that all depends on not having a recession, because if you don't have a recession, the Federal Reserve rate cuts create this environment of soft landing, quantitative easing, and the markets tend to like that very much. And 1 year later, we are at much higher levels than we were when the Feds first started cutting interest rates. Now, this right here is going over the prior year performance and then what happens to the 1 year, 6 month performance after the Federal Reserve started cutting interest rates. In 2024, all the way through September 18th, 2024, what we have here is a performance in the S&P 500 up over 26.6%. So this is not year to date, but this is going back one full year. So going back from September to September, and every time we are up over 25%, so every time we're up over 25% in the S&P 500, and that's when the Federal Reserve has started cutting interest rates. Well, guess what? Once again, we've got a 100% probability that 1 year later we are higher by an average and median gain of 19 to as much as 20% in the market. So those again are very, very strong probabilities. However, one more interesting chart that I want to share is small caps typically outperform in the 6 to 12 months after the first rate cut, versus, again, large cap, right? So small caps tend to perform much better in 6 to 12 months post Federal Reserve rate cut, primarily due to the fact that, again, rate cuts is a quantitative easing measure, which helps smaller parts of the business, smaller companies, more than it helps large caps. But again, a lot of that depends on the R word that we are trying to answer, whether this economy is going to tip into a recession or not. Because if it is, as you know, recession leads to poor performance from the market, versus if there is no recession, and again, average percentiles every time, we've seen very, very nice rallies for the market, versus when there is a recession, we've seen a little bit of consolidation, of course, selling off, and essentially seeing negative returns for the market as well. So we got Jerome Powell talking at 9:20 a.m. Eastern on Thursday, September 26th, as well as a lot of other members of the FOMC talking this week. We got GDP numbers coming out at 8:30 a.m. Eastern, jobless claims numbers the same day, same time. And of course, we've got the personal income and outlays, personal consumption expenditure, consumer sentiment, preferred measure of Fed's inflation numbers are also scheduled to come out on Friday, September 27. Now, in terms of the volatility term future, we're still at negative 2.2%. So that means that we're still in backwardation, where the markets are expecting for a little bit of a higher volatility number going into October. So that's the October contract, as you can see right there, expecting for 18. 18 is going to be that number for volatility. That's what the markets are expecting moving forward. And we're still in backwardation. Definitely does suggest there is some underlying risk of volatility increasing in the markets right now. And this is where we are with the MoneyVest dashboard. We're back above 4, so we're at 4.06. Volatility has receded down to 15, so we're in the 35 percentile. That's the backwardation that I just showed you guys. Over 78 to 77% and 72% of stocks trading above their 20, 50, and 100 simple moving average. We're again very, very high on the percentiles over here. We're trading at over 23 times earnings multiple in the 90th percentile again. And we've got the put call ratio, which I did not update. So where we are here is 0.907 is where we're at, with the R side 65 on the market. So what I'm going to put down is, again, the risk reward is not going to be favorable in the markets right now. So there's going to be an X over here. If you are somebody who is simply dollar cost averaging into broad-based ETFs and index funds, again, this doesn't apply to you specifically. But if you are looking at individual stocks, looking at fair values, looking at the overall market's positioning, the risk reward is certainly not favorable looking at a lot of these market breadth and technical indicators at the moment. Now going over to the technical breakdown, so volatility continues to come down, so we're getting crushed to low 15s now, and again, the lower it gets down to, the more cautious, the more alert we need to be. But as I like to reiterate and point out, that this right here can be a buying opportunity for us, right? So this is clearly a buying opportunity. When the VIX is high, it's time to buy. It's a buying opportunity when the VIX is high. However, this is not a sell opportunity. This is not a sell signal. When the VIX is low, it's time to go. That simply means that we can just sit back, enjoy the gains, enjoy the markets, keep pushing higher, let them do all the work for us. Doesn't mean that we have to liquidate our portfolio, sell everything, and just get out of the market. It simply means that the risk reward is not favorable. I'm going to sit out, I'm going to raise more cash, and just let the market do its thing. That's it, right? However, the opposite is when the VIX is high, it is time to buy. So that's when we can actually take a decision, and that's what we did back on August 5th, back on September 5th, and right now we're starting to roll back down and coming back down to those levels here in the 15 to 16. And again, the lower we get down to, the more cautious, more alert I will be. And I will definitely let everybody know in our community as well. Coming over to the markets here, S&P 500 on the 30-minute time frame, brand new all-time high. So congratulations to everyone for new all-time highs in the S&P 500. It's only a matter of time that we get back to all-time highs here. But again, what goes up comes down, and market moves in cycles. So always remember that there's always going to be more opportunities in the markets over the long term, because we go up, and there's most certainly going to be a pullback and a correction later in later in the future as well. So going over to QQQs, and the NASDAQ here also pushing up over 0.5%, and we're coming up to that resistance at 487. So that right there is going to be that level to keep in mind for QQQs. Of course, all-time high sits well over $500 per share. So we're still a little bit over 3%, just over 4% away from our all-time highs at the moment. Coming over to Apple, and Apple stock on the day here, 227 is where we're at. Support level is going to stay put inside this green rectangle. That's a very strong area of demand, down to as low as $207 resistance, all the way up to as much as $236 for Apple. Amazon also very close to its all-time highs at $201 per share, so it's done incredibly well, getting back up to near all-time highs again. And support level is going to stay put at 189, resistance all the way up to $201 per share. Tesla continues its streak higher. My price target's up to as much as $267, as we've already discussed. Right now trading just over $254. I'll see if I want to get those calls expire in the money and have my shares get called away. I think that's going to be the plan right now, but we'll keep you guys updated on the Discord. Again, join with that 16% annual discount that's available until the end of this month if you want to get access to all the alerts, all the updates, and members-only videos, and again, portfolio updates as well. But for Tesla, support level is going to stay put right there, 236, 237, and my target and resistance at 266 to as much as $267 for Tesla. Coming over to PayPal. PayPal continues to be a big outperformer in the market here, up over 86 basis points. Support level is going to stay put at $76, and the next target and resistance that we're watching is going to be all the way up to $88, $89 for PayPal. And so support level, like I said, $76, $77, and resistance all the way up to $89 per share. That's pretty much the next target. Visa getting investigated by the DOJ and selling off over 5.5%. We discussed that during our live stream, so we'll talk about that in another video in more detail. But this right here is going to be that support level to watch for Visa, sitting roughly in the 260s. This could actually be a bit of a opportunity for us. I may look into selling some puts here on Visa, maybe down in the 250 strikes. We'll talk about that in our Discord and update you guys, but this right here is where we are. We're also very, very overbought, so this is very normal of a pullback for Visa also coming in, down over 5.5%. Now coming over to the star of the show, Nvidia pushing up almost 4%, so starting to a little bit break out about 118. So we were kind of struggling to break out over $118 for a really long time, and finally got a lot of volume, pushing back up to 121. Looks like I'm going to have to roll out my contracts again. That's good. I continue to collect some net credit and also unlock more and more capital gains for Nvidia here. And next target and resistance is going to be all the way up to as much as 140. But before we get there, there's going to be another level to keep in mind at 129 for Nvidia as well. Support level is going to stay put at $113 for this company. Talking about advanced micro devices and AMD here. Resistance is going to stay put at 162. Support level roughly around $142. Very, very nice move to the upside. Again, a higher lows coming in, and that is going to be the target and resistance to keep in mind for Advanced Micro Devices at $162. Coming over to Meta Platforms, and Meta here is one of the stocks that was rolling over. Makes sense considering how overbought it really is with the RSI, the MACD, and the L3 banker oscillator. I also want to take a look at Nvidia here, see if there was any type of buying activity here. So again, L3 banker oscillator just about yellow. And then Tesla here, let's take a look. And Tesla definitely has had a lot of institutional involvement more recently as it continues to have a lot of volume. And of course, the L3 banker oscillator, RSI, MACD, everything starting to move up very, very well. But coming back over to Meta Platforms, and support level is going to stay put down to as low as 541. And we don't really have a resistance or a target right now, but support level at 540 down to as low as 479, 480 for Meta moving forward. Netflix hitting a new all-time high. So very nice breakout above $700. 722 is going to be the price that it's trading at, and we're going to go ahead and remove this. And support level is sitting roughly around $705 down to as low as $661 for Netflix. Talking about Google, and Google here again continues to find a lot of supply and resistance, getting rejected in and around these levels at 163, 164. Support level is going to stay put down to 153 for Google. Again, getting rejected here inside this red rectangle at the moment. So that's that area of supply to watch for Google. And Microsoft also starting to rotate back down over 1% on the days. So this right here, a little bit of a breakdown for Microsoft, turned back into a resistance, and support level all the way down to as low as low 400s once again for this company. And finally, coming over to Costco and Enphase. And Enphase Costco continue to consolidate sideways here. So Costco rolling sideways, resistance going to stay put at 919 down to as low as $872. And then finally, we come over to Enphase, also consolidating in that range with 124 resistance and a low 100s support, and closer to $93 as is support for Enphase as well. So hope you all enjoyed this video and a complete update on the markets. Be mindful of where we are. Volatility is back in the 15s. Money Vest Index is back above 4. Market breadth is back, trading in the 70 percentiles for a lot of these individual stocks, trading back above their moving averages. So yes, the breadth is good. However, we are overbought. Volatility is low. Money Vest Index is back above 4, so I am definitely going to be very careful and cautious in this market environment. Continue to trade options because the markets are certainly very hot for options right now. So if you want to get access to all those alerts, link's going to be down below. Would love to have you on board. Like I said, the 16% annual discount expires at the end of this month here, so 5-6 more days left. As always, happy investing. I'll see you all in the next video.